Alright everyone, if you think the AI war is just about NVIDIA or OpenAI, you're looking at the tip of the iceberg. Today we're going into the engine room. We're comparing two giants you've probably never heard of. But without them, ChatGPT doesn't exist. AEI versus MKS Instruments. It's a classic showdown, the Agile Speedster versus the asset-heavy Fortress. Which one should you bet on for 2026? Let's crack the code. 2025 was a weird year for chips. Most of the market was feeling a bit hungover, but one segment exploded: generative AI. Now, look at this. While everyone else was complaining about slow sales, AEI found a golden ticket. They literally plugged their power systems into the AI grid and started printing money. Meanwhile, MKS was playing a different game, building a patent wall so high that 85% of every wafer on the planet has to pay them a toll just to exist. It's agility versus sheer dominance. But wait. There's a massive hole in someone's pocket. Look at these numbers. AEI has more cash in the bank than they have debt. They are basically the guy who pays for dinner in cash. Then look at MKS. $4.28 billion in debt. To put that in perspective, MKS pays $212 million a year just in interest. That's enough to buy a private island every 6 months. This isn't just a number, it's a quote, valuation ceiling. It means MKS is running a marathon while carrying a backpack full of bricks. Let's talk about AEI's rocket ship. Look at their data center revenue. It didn't just grow, it doubled, plus 106% in 1 year. In the consulting world, we call this a hyper-growth pivot. In the real world, it means if you're building a GPU farm, you're probably calling AEI. They've moved from just being a quote-quote supplier to being the power backbone of the AI revolution. Now, don't count MKS out. They are the ecosystem giant. They don't just sell you a machine, they sell you the ink for the printer. By buying Atotech, they now control the chemicals and the vacuum systems. Look at that 54% margin on materials. That's not a business, that's a license to print money. Even if chip sales slow down, the machines still need the chemicals to run. It's a classic razor and blade strategy, executed at a multi-billion-dollar scale. The trade war is real, folks. Both companies are packed their bags and leaving China. AEI shut down their big factory in Zhongshan and headed to the Philippines and Mexico. MKS is building a massive tech cluster in Malaysia. Why? Because geopolitical risk is the new interest rate. If you can't ship your product because of a tariff, your tech doesn't matter. They're basically moving the entire supply chain to quote safe zones to keep the engines humming. How do they stay ahead? Innovation. AEI is spending nearly 13% of their lunch money on R&D. They're the sprint innovators, getting tech to market fast to catch the AI waves. MKS spends less as a percentage, 7.6%, but they are building generational barriers. They're working on stuff that won't be in your phone for another 5 years. One is a high-speed Ferrari, the other is a slow-moving, unstoppable glacier. Let's look at the scoreboard. Revenue? AEI is growing twice as fast as MKS. But gross margin? MKS wins because of that chemical moat we talked about. The kicker is at the bottom, goodwill. MKS has a lot of accounting error on their books from old acquisitions. If things get shaky, that could lead to a massive write-down. AEI's balance sheet, however, is as clean as a whistle. In this industry, your IP walks out the door every night at 5 p.m. Keeping people is the secret sauce. MKS has a 6% voluntary turnover rate. In the tech world, that's practically unheard of. People stay there because they own the niche. AEI is more about agile leadership and fresh blood. It's the difference between a legacy craftsmanship shop and a high-intensity tech startup culture. This is where it gets nerdy, but profitable. Chips are becoming skyscrapers. 300 layers of memory stacked on top of each other. If the power fluctuates by just 0.1% while etching these layers, you've just turned a $50,000 wafer into a very expensive frisbee. This is why AEI and MKS are quote-quote un-fireable. Once you design their power systems into your factory, you're married to them for at least 3 years. Wall Street is playing favorites. They love AEI right now because it's clean growth. No debt, pure AI story. But MKS is trading at a discount. Why? Because of that debt gravity we saw earlier. But here's the contrarian take. MKS is a fortress on sale. If they can pay down that debt, the stock is gonna pop like a champagne cork. The road ahead? 2026 is the year of the mega factory. Both companies are going live with massive new plants in Thailand. By 2027, MKS will start riding the next wave of high-NA EUV, the most advanced chip-making tech ever. This isn't a short-term trade. It's a 5-year chess game. Now, for the nightmare scenarios, AEI has a major eggs-in-one-basket problem. 3 customers make up over half their money. If one of them says goodbye, AEI has a crater-sized problem. MKS, on the other hand, is getting squeezed by China sanctions. They're losing $250 million a year because they can't sell high-end gear to Beijing. Pick your poison, concentration or geopolitics. Final verdict time. If you want a high-velocity AI play and you hate debt, AEI is your winner. It's lean, it's fast, and it's riding the server boom. But if you're a value seeker looking for a deep cycle moat that owns the entire industry infrastructure, MKS is the one to watch. Once they shed that debt, they'll be unstoppable. It's the Speedster versus the Fortress. Who are you picking? That's it for today's deep dive. If you want the full, data-heavy page report on these companies, email our team at sales@hdinresearch.com. Don't forget to check out hdinresearch.com for more institutional-grade analysis. Hit that subscribe button, stay curious, and I'll see you in the next one.